With Ethereum heading for its best quarter in 3 years, our next guest predicts the major coins will continue to benefit from the ETFs and next month's halving. Morgan Creek Capital Management CEO Mark Yusko is here now to explain. Mark, great to see you. It's been a while.
You too, Melissa. Always great to be on the show. Thanks for having me.
So you're forecasting Bitcoin to 150,000 in the next year or so. Can you explain how you get to that math?
Yeah, so it is just math. So we look at the fair value today from the Metcalfe's law model. That gives us round numbers around 50,000. The halving occurs in 3 weeks. What a halving does, it cuts the block rewards, the amount of money that's given to the miners to secure the network. If those rewards were to get cut in half, as they do, many of the miners would struggle. So historically, what has happened, the price rises, the fair value rises. So that would push it at 100. But this time it's a little different in that instead of just block rewards, we get transaction fees because of ordinals and inscriptions. So let's say the fair value only goes to 75 this time. Then post-halving, you get a lot of interest in the asset, a lot of people FOMO in, and we normally go to about 2 times fair value in the cycle. So in the last cycle, fair value was 30. We got as high as 68, 69. This time, I think probably 2 times because there's less leverage. So that gets us to 150.
So what's that path like to 150? Because I know that last summer you had called for a blow-off top in 2024, and we haven't seen that. Is that still to come before we get to that 150?
So the big move happens post-halving. So the halving occurs sometime between April 20th and April 21st, most likely. So once that occurs, then you start to get an increase in demand, right, from the ETFs and other people interested. But the supply of new coins goes from 900 a day to 450. Well, think about it. If there's more demand than supply, price has to rise. So the price starts to rise. It starts to become more exponential or parabolic toward the end of the year. And historically, about 9 months after the halving, so sometime toward Thanksgiving, Christmas, we see the peak in price before the next bear market.
So, Mark, Bitcoin gets the headlines, MicroStrategies and equity Coinbase. What are other things out there, equity or other coin, that you're looking at that nobody's talking about?
You know, it is so hard because the regulatory regime has been pretty restrictive. I mean, there are the mining companies that secure the network. They've had a really good run, so the valuations are a little toppy, but we do like those businesses. There are component companies that make the machines that secure the network. AMD and NVIDIA have been a story, a proxy to play the crypto markets for about 6 or 7 years. But again, they're at valuation levels that are tough to stomach. There are a lot of really interesting products and new tokens in the private markets. That's where we traffic at Morgan Creek Digital. About 80% of what we invest in are private companies, and only about 20% are in the liquid tokens. But we like things like Ethereum, we do like Solana, we do like Avalanche, and you can go down a little bit lower on the capitalization scale. Bitcoin's the king. It is the dominant token. It is a better form of gold or digital property now, as Michael Saylor calls it. So I do think it will be the best, but the law of large numbers comes in. I think it could go up 10x from here easily over the next decade, but I think some of the smaller projects will go up orders of magnitude more, just the law of small numbers.
For that 20% in the more liquid tokens, Mark, I'm curious, do you just buy and hold, hodl, or do you actually trade around the position?
Melissa. And we're a venture capital firm, Morgan Creek Digital, so we're not a trading fund. So we do buy and hold or hodl, but we will sell on occasion. We sold a bunch of our Solana 2 years ago when they ran into problems with the network. We sold about 2/3 of it. Thankfully, we didn't sell all because it's done well. We sold about 3/4 of our Coinbase stock when it went public. And now we hold about 1/4 of it. And we think big things are in line for Coinbase. That's one I forgot to mention. We do like Coinbase a lot. So we do hold mostly as opposed to trade. Great question.
Wow, what an insightful interview with Mark Yusko. Did you catch his bold prediction for Bitcoin hitting $150,000 in the next year or so? If that doesn't pique your interest in the crypto space, I don't know what will. Thank you for watching InvestMinder, and if you haven't already, make sure to subscribe to our channel for more exciting content on investing and financial markets. We aim to keep you informed and up to date with the latest trends and insights. Disclaimer: please note that we are not a professional financial advisory firm, and our videos are intended solely for educational and entertainment purposes. Any information provided should not be considered as financial advice, and we encourage you to conduct your own research and consult with qualified professionals before making any investment decisions. Now let's dive deeper into Mark Yusko's predictions and explore what's next for Bitcoin and the crypto space. In the interview, Mark Yusko confidently forecasted that Bitcoin could reach an astonishing $150,000 within the next year or so. This bold prediction is not just a wild guess, it's backed by mathematical models and historical patterns observed in the cryptocurrency market. Yusko explained that his projection is based on the Metcalfe's law model, which currently suggests a fair value of around $50,000 for Bitcoin. However, the upcoming halving event, expected to occur around April 20th, 2024, could be a game-changer for the world's largest cryptocurrency. The halving is a pre-programmed event that occurs roughly every 4 years in the Bitcoin network. During this event, the rewards given to miners for validating transactions and securing the network are cut in half. This reduction in the supply of new Bitcoin entering the market has historically led to an increase in demand and consequently a surge in Bitcoin's price. According to Yusko, the halving could initially push Bitcoin's fair value to around $100,000. However, this time there's an added element that could further amplify the price appreciation transaction fees from ordinals and inscriptions. Ordinals and inscriptions are relatively new concepts in the Bitcoin ecosystem, allowing users to inscribe data such as non-fungible tokens, NFTs, or digital artifacts directly onto the Bitcoin blockchain. As more people adopt and use these features, the transaction fees generated could provide an additional revenue stream for miners, potentially offsetting the impact of the reduced block rewards. Yusko estimates that even if the fair value only reaches $75,000 after the halving, the influx of interest and demand from investors and enthusiasts could propel Bitcoin's price to around 2 times its fair value, similar to previous market cycles. This calculation leads to his $150,000 target for Bitcoin's potential peak in the current cycle. It's important to note that Bitcoin's price has historically exhibited a cyclical pattern, with significant run-ups preceding a period of consolidation or correction, often referred to as a bear market. Yusko believes that the peak price could occur around Thanksgiving or Christmas, approximately 9 months after the halving event, aligning with historical trends. While Bitcoin undoubtedly steals the limelight in the crypto space, Yusko also touched upon other promising projects and investment opportunities. He mentioned mining companies that secure the network, component manufacturers like AMD and Nvidia, which have benefited from the crypto boom, and private market investments in innovative protocols and tokens. Yusko's firm, Morgan Creek Digital, allocates around 80% of its investments to private companies in the crypto and blockchain space, reflecting the potential for disruptive innovation and growth in this emerging sector. However, he also acknowledged the importance of established players like Ethereum, Solana, and Avalanche, which could potentially outperform Bitcoin in terms of percentage gains due to their smaller market capitalizations. While Bitcoin undoubtedly dominates the cryptocurrency landscape, Yusko highlights the potential for other projects to outperform the flagship digital asset in terms of percentage gains. This is largely due to the law of small numbers, where smaller market capitalization projects have more room for exponential growth compared to the relatively massive Bitcoin. One area that Yusko finds particularly intriguing is the mining sector. Companies that secure the Bitcoin network by validating transactions and creating new blocks have enjoyed a significant run in recent years. However, Yusko cautions that some of these mining stocks may be approaching lofty valuations, making them less attractive from a value investing perspective. Alternatively, Yusko suggests looking into component companies that manufacture the specialized hardware and chips used in crypto mining rigs. Semiconductor giants like AMD and Nvidia have effectively become proxy plays for the crypto markets, benefiting from the surge in demand for their high-performance graphics processing units, GPUs, over the past 6 to 7 years. Nonetheless, Yusko acknowledges that even these established tech companies may be trading at stretched valuations, making it challenging to find compelling entry points in the public markets. This has led Morgan Creek Digital to focus a significant portion of its investments in the private markets, where Yusko believes some of the most promising opportunities lie. In the private realm, Yusko's firm is actively exploring innovative protocols, decentralized applications, dApps, and new token offerings that could potentially disrupt various industries or create entirely new markets. While he refrained from naming specific private investments, Yusko's enthusiasm for this segment of the crypto space is palpable. Turning back to the more liquid and established cryptocurrencies, Yusko expressed his bullish stance on several prominent projects beyond Bitcoin. Ethereum, the second largest cryptocurrency by market cap, is a platform that Yusko and his team have high conviction in. With its robust ecosystem of decentralized applications and the upcoming transition to a more energy-efficient consensus mechanism, known as the merge, Ethereum could continue to gain traction and adoption. Solana and Avalanche are two other blockchain networks that Yusko highlighted as potential winners in the crypto space. Both projects are known for their high throughput and low transaction fees, making them attractive platforms for decentralized finance, DeFi, applications, and non-fungible token, NFT, marketplaces. While acknowledging Bitcoin's dominance as the king of cryptocurrencies, Yusko believes that the law of large numbers will eventually catch up, potentially limiting Bitcoin's upside potential compared to smaller projects. Nevertheless, he remains confident that Bitcoin can easily achieve a 10x increase in value over the next decade, cementing its status as a superior form of digital property or digital gold, as advocated by MicroStrategy CEO Michael Saylor. As we delve deeper into the crypto space, it's essential to understand the dynamics that shape the market and drive price movements. One of the key events that Yusko emphasized was the upcoming halving of Bitcoin's mining rewards, expected to occur around 20 to the 21st of April of 2024. The halving is a pre-programmed event that occurs roughly every 4 years in the Bitcoin network. During this event, the rewards given to miners for validating transactions and securing the network are cut in half. This reduction in the supply of new Bitcoin entering the market has historically led to an increase in demand and consequently, a surge in Bitcoin's price. However, Yusko believes that this halving event could have an even more significant impact due to the introduction of ordinals and inscriptions on the Bitcoin blockchain. These relatively new concepts allow users to inscribe data such as non-fungible tokens, NFTs, or digital artifacts directly onto the Bitcoin blockchain. As more people adopt and use these features, the transaction fees generated could provide an additional revenue stream for miners, potentially offsetting the impact of the reduced block rewards. According to Yusko's calculations, even if the fair value of Bitcoin only reaches $75,000 after the halving, the influx of interest and demand from investors and enthusiasts could propel Bitcoin's price to around 2 times its fair value, similar to previous market cycles. This calculation forms the basis for his bold $150,000 target for Bitcoin's potential peak in the current cycle. It's worth noting that Bitcoin's price has historically exhibited a cyclical pattern, with significant run-ups preceding a period of consolidation or correction, often referred to as a bear market. Yusko believes that the peak price could occur around Thanksgiving or Christmas, approximately 9 months after the halving event, aligning with historical trends. While Bitcoin's future trajectory is undoubtedly the focal point of many investors' attention, Yusko also shed light on other compelling investment opportunities within the broader crypto ecosystem. One area that piqued his interest is the mining sector, specifically companies that secure the Bitcoin network through the energy-intensive process of validating transactions and creating new blocks. Yusko acknowledged that while some of these mining stocks have enjoyed a significant run, their valuations may be approaching lofty levels, making them less attractive from a value investing perspective. Alternatively, he suggested exploring component companies that manufacture the specialized hardware and chips used in crypto mining rigs, such as semiconductor giants AMD and Nvidia. However, Yusko cautioned that even these established tech companies might be trading at stretched valuations, making it challenging to find compelling entry points in the public markets. This has led Morgan Creek Digital to allocate a significant portion of its investments, around 80%, to the private markets. where Yusko believes some of the most promising opportunities lie. Diving deeper into the private market opportunities, Yusko shared his enthusiasm for innovative protocols, decentralized applications, DApps, and new token offerings that have the potential to disrupt various industries or create entirely new markets. While he refrained from naming specific private investments, his firm's focus on this segment of the crypto space is a testament to the vast potential for disruptive innovation. Turning our attention back to the more established and liquid cryptocurrencies, Yusko expressed his bullish stance on several prominent projects beyond Bitcoin. Ethereum, the second largest cryptocurrency by market capitalization, is a platform that Yusko and his team have high conviction in. With its robust ecosystem of decentralized applications and the upcoming transition to a more energy-efficient consensus mechanism, known as the merge, Ethereum could continue to gain traction and adoption, potentially driving significant value appreciation. Solana and Avalanche are two other blockchain networks that caught Yusko's attention. Both projects are known for their high throughput and low transaction fees, making them attractive platforms for decentralized finance, DeFi applications, and non-fungible token, NFT marketplaces. As these ecosystems continue to grow and attract more users and developers, the underlying cryptocurrencies could experience substantial price appreciation. While acknowledging Bitcoin's dominance as the king of cryptocurrencies, Yusko believes that the law of large numbers will eventually catch up, potentially limiting Bitcoin's upside potential compared to smaller projects. Nevertheless, he remains confident that Bitcoin can easily achieve a 10x increase in value over the next decade, cementing its status as a superior form of digital property or digital gold, as advocated by MicroStrategy CEO Michael Saylor. One aspect that sets Yusko's investment approach apart is his firm's willingness to strategically sell portions of their holdings when opportunities arise. He shared examples of selling around 2/3 of their Solana holdings when the network faced challenges and offloading about 3/4 of their Coinbase stock following the company's public listing. This disciplined approach to portfolio management demonstrates a commitment to maximizing returns while managing risk effectively. Interestingly, Yusko mentioned that despite selling a significant portion of their Coinbase holdings, they still retain a sizable stake in the company, indicating their long-term confidence in the leading cryptocurrency exchange's prospects. Coinbase's position as a regulated and trusted gateway to the crypto markets could prove invaluable as mainstream adoption continues to grow. As we navigate the ever-evolving crypto landscape, it's important to remember that volatility and cycles are inherent characteristics of this asset class. Yusko's predictions and insights serve as a valuable guide, but they should be taken in the context of a long-term investment horizon and a well-diversified portfolio that aligns with individual risk tolerances and investment objectives. In conclusion, the cryptocurrency space is undoubtedly an exhilarating frontier for investors seeking potential high returns and exposure to disruptive technologies. Mark Yusko's insights and predictions, backed by mathematical models and historical patterns, offer a compelling perspective on what lies ahead for Bitcoin and the broader crypto ecosystem. While Bitcoin's projected path to $150,000 within the next year or so is indeed an ambitious target, the upcoming halving event, coupled with the growing adoption of ordinals and inscriptions, could catalyze a significant surge in demand and price appreciation. However, it's crucial to remember that crypto markets are inherently volatile, and investors should exercise caution and conduct thorough research before making any investment decisions. Beyond Bitcoin, the crypto space is teeming with promising projects and investment opportunities, from established platforms like Ethereum to emerging networks like Solana and Avalanche. The private markets, where Yusko's firm focuses a significant portion of its investments, offer a glimpse into the cutting-edge innovations that could reshape industries and create entirely new markets. As we navigate this rapidly evolving landscape, it's essential to maintain a long-term perspective and a well-diversified portfolio tailored to individual risk tolerances and investment objectives. Volatility and cycles are inherent characteristics of the crypto asset class, and a disciplined approach to portfolio management, as exemplified by Yusko's strategic selling of holdings, can be instrumental in maximizing returns while managing risk effectively. Remember, the information shared in this video is intended for educational and entertainment purposes only, and should not be construed as financial advice. We encourage you to conduct your own research, consult with qualified professionals, and make informed decisions that align with your financial goals and risk profile. Thank you for joining us on this exciting exploration of the crypto space. If you found this video informative and insightful, please consider subscribing to our channel InvestMinder for more engaging content on investing and financial markets. Until next time, happy investing.
Thanks again for watching and good luck with your dividend empire aspirations. Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.